The broadcast is now starting. All attendees are in listen-only mode.
Listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today's Wednesday, 15th day of April, 2020. Thanks so much for tuning in. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office or away from the desktop, point any internet-connected browser to CFRN.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You can also find us streaming live during the show on YouTube, on Facebook, and Twitter. Let's open with a word of prayer. Father, we just thank you for your blessings, for your mercy, for your grace. We thank you that we're starting to see light at the end of the tunnel, that this thing is turning around. We put all of our faith, all of our trust, all of our hope in you. We pray that you continue to watch over each one who's been touched by this virus. We pray for our first responders, for the doctors, for the scientists, and for those in government positions. We pray for them as well, Lord. Give them clarity of thought. Give them supernatural wisdom that comes only from you. Because as much as we count and depend upon them, we know that ultimately our trust, our faith, our great hope is in you and you alone. In Jesus' name we pray. Amen. All right, let's take a look at the S&P 500 Emini Futures on the daily chart. So, as we discussed yesterday, from the swing high back on February 20th to the swing low March 23rd, we rallied up to the BBC. From the swing high to the swing low, the BBC just happened to be right at that 38% fib. When we approached that from below, we expected to be good resistance. It was. It sent price back down to old blue and climbing. It has a technical term, but I just call it red and falling, blue and climbing. Back to blue and climbing, which we expect to be good support when we approach it from above. Sent us back to the BBC, resistance, but this time we got through. In fact, we made it all the way up to the 50% reverse fib. This was yesterday. This is today. And what we talked about that we would be looking for today or over the next couple of sessions, now that we have this bullish cross, just as back here we had the bearish cross, we now have a bullish cross. So what we're looking for is a pullback to the BBC, and when we approach it from above, we expect it to hold until it doesn't. And if we can get that pullback, while everyone will think the recovery's failing, the rally's over, we'll be watching this area right here for good support. And when the market finds that good support, that's when we will begin to look for the leg to the upside. Just as we were looking for a leg to the downside, we need the pullback. And this red candle, while it's not what anybody wanted to see today, especially investors, we know that's just part of the process. A pullback to the BBC, it holds, and we go back up to challenge this 50, challenge these swing highs, and then we can continue on up to challenge the 62% fib, and then this will be the big area right here where we had the bearish cross, this price at 32.72. Write that down. the day price gets into this area, look for some pretty good resistance. And depending upon how rapidly we get there, then that could create a pretty deep pullback to the BBC, which by then would be up here. We would expect that to hold. We then make another run at this area. Hopefully we get through it, and then before you know it, we're back to all-time historic highs. That's a simplified version of how things may unfold. I'm sure there'll be a lot of crooks and turns along the way, but that's our story, and we're sticking to it. Let's go over the numbers from around the world. These are the cash markets, the indices, as they're called. Start here in the U.S. with the Dow. Maybe refresh that and make sure I've got the freshest data. The Dow currently down 634 points, 2.5%. NASDAQ down 165, 2%. S&P 500 down 78, 2.75%. And the Russell 2000 down 57, 4.5%. In the commodity basket, crude oil down 57 cents, trading 19.54 last. That puts us back below $20 a barrel for crude. That's a drop this session of almost 3%. Gold down $29 today, trading 17.39.90 last. We expected to move lower in gold because of the head and shoulders pattern that we had setting up yesterday. I'll go over it in more detail later in the show, but a quick look, and this isn't the perfect picture. I'll show you the perfect picture. Head, shoulder, shoulder, neckline. And as we broke that neckline yesterday, I said, now watch for price to come back and test the important price, important area at the neckline. It did. It ran into support, did it again. And let's just real quick go ahead and from the top of the head to the neckline. So a measured move off the break of that head and shoulders takes us down to the 1720 area, and we have a weekly trading zone at 1723/24. I'll show you a better picture of this head and shoulders that I created yesterday. So gold again down $29, trading 1739.90 last. It's a drop of 1.5%. In the Asian markets at the close, Nikkei down 88, Shanghai down 16, and the Hang Seng down 290. That's a drop of a little over 1%. And in the European markets at the close, FTSE down 193, DAX down 416, the CAC down 170. Now that's a drop of more than 3% for each of those indices, and the DAX getting hit the worst, down almost 4%. So that gives us a red day in Asia, a red day in the UK, and it's a big red radio Wednesday here in the US of A. Let's go to Michael, get a recap of everything that happened in the live training room this morning. Michael, if you're ready.
I am ready. I am ready.
Okay.
And bring this up. Slide that over. There we go. Okay. Here we go. Wednesday, right?
Yeah. There we go. Okay. It's locked and loaded. It's all yours.
All right. Got it. Thank you. All right. Good afternoon, everybody. Today is Wednesday, the 15th day of April, 2020. If you have not taken a free trial with us and you want to take a free trial, go to the homepage at CFRN.net. And right down here, it says free 5-day trial. Click on that. And it's going to bring you to this page, eminitrainingschool.com, where all we ask for is your name, your email, your phone number, and you can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. I had yesterday somebody signed up, and it's interesting to see what people's challenges are. But it's useful information for us, so that when we do schedule a one-on-one mentoring session with you, we'll have something to go on. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click that link, we don't know that you took the free trial. Now, the recap results. Today, as I said, is the 15th day of April, 2020. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. We didn't place a lot of trades today. It was really a choppy market today. There were a lot of trade opportunities. We only took 4 of them, but we're +1 on the euro, +10 on crude, and +16 on the ES. That put us at +306.25 on the morning session. And today, once again, our first trade, it took 19 minutes. First trade, +$100 a contract, the goal for the day. And we only took 4 trades this morning. So on the month now, we're at $4,550. That's over 10 days, averaging $455 per contract per day. On the year, we're at $26,523. That's over 68 days, averaging $390 per contract per 2-hour day. Okay. Now, let's get into what did or didn't happen. This is gold. So I'm scrolling back here on the gold. We didn't do anything with gold today, but it doesn't mean there wasn't anything to be done. It started out right in here. Was the shorting opportunity. Then it flipped around and went long. There was a long opportunity right here. That took a little while to develop, but it did. Another one here. Another one here. Let's see. On the short side, we flipped around and we had a shorting opportunity there. Then it flipped around again and gave a long right there. That didn't put in a higher swing over here, so we didn't have a continuation. Then right here, I was looking for a lower swing, but we didn't get that. We had a chance there and a chance there. And then it flipped around and gave us another one right here. And over here. And here. And here. So there was a lot of opportunity today on gold. I think I was doing training more than trading this morning. That's why I only had 4 trades. And I just showed you like 10 on gold alone. And the ES is going to have had a bunch too. But I'll get to that in a minute. Our Julie trend line here, we're looking for the close above it. We got it. Got another one right there. A short here. A short here. A short here. And so there was just a ton of opportunity today on gold. Now, the problem with gold is that it's trading so thin, there's still a spread. That's, I'm hesitant to get into the gold because of that. All right, on the euro, it was really choppy here for a long way. Then it broke out. Give us a long trade here. I missed. And then a long trade here that I took one tick profit on. Then another long trade there. And that was pretty much it for the euro. The euro was pretty choppy today. Now, crude oil. And I'm trying to scroll right now. We had crude inventories come out today. And once again, it was a miss. Big miss. 19.2 million. A build of 19.2 million. That is huge compared to what we normally have. Look at this. You see that? Now, if we go back here, we had a build. What's that say? 9.4. But this is the norm right in here. And right now, nobody is traveling. That's why we have those huge builds, 19.2 million. And I mean, the housing market index. Look at that. This is the norm, above 50. And it's at 30. It's just craziness. Craziness. Anyway, on crude oil. Right here, we had a long opportunity. We picked up 10 ticks. Is that right? Yeah, that's where we got our goal for the day. That was after 19 minutes. And here, we had a short right in there. Then over here, there was a long and another long and a short. And then it got really choppy right here during the break. See, I wouldn't have done anything during the break. Well, I didn't do anything during the break. But the ES, now the ES is going to have a lot of movement. I'm just going to go over what we actually did do on the ES. We actually only had a couple of trades, but I'll go over the ones that I highlighted too. Okay, so on the ES, we'll start right here. This was our first trade on the ES, and we picked up 8 ticks on that. Then it flipped around, but the slingshot's not letting us get in. Okay, not until over here, where we picked up another 8 ticks. Well, right here, there was an opportunity. But right here, we picked up another 8 ticks. That put us at plus 16 on the morning session. Now, you have to keep looking down here at the slingshot. Okay, look at the trend, look at the slingshot. If you have both, then look at price and see what's going on. So we had right here, lower highs, lower lows. Slingshot pulled away from a red cycle. And we got to bounce off the BBC. So we had a trade there and a trade there. Then, continuing on, right here, we had a trend. Green line pulled away from the cycle. We had to close above the trend line. So there was a long trade right there. Okay. Let's keep going. You see, we have a trend, but it's not coming together really well on price. Okay, and then we get into the break. And during the break, what do we have? A shorting opportunity right there. Another one right there. It's having a tough time creating a quantifiable trend right now. You see all these wicks that we have here. Wicks at the top and wicks at the bottom. The cycle's going up really steep to the BBC. But then it's probably going to get rejected and create another wick. So that's what we had today on the ES. Joe, the long trade on the euro. Which one? This one right here? The question, okay, yeah, the question is, it was going into dynamic resistance. I would have taken anyway. Dynamic support and resistance only come into play on momentum trades. Okay, this was not a momentum trade. This was a trend line trade. Okay. If the entry point would have been above the MA1 and dynamic resistance were right there, and it had not been broken, then I would not have taken it. But if we have broken dynamic resistance, or if the entry point is below the MA1, then you can just ignore dynamic support and resistance. Okay. Oh, those were a lot of words, but I just want to make sure you understood. Dynamic support and resistance only come into play on momentum trades. Okay. And that was not a momentum trade. Okay. And with that, let's go back here. You see we have a couple of news events coming up here this afternoon. The beige book, I mean, they show it as low impact, but it's not necessarily low impact, and it can move the markets. So you got to be careful around 2 p.m. The tick long-term purchases, that's at 4 p.m. You don't want to be in the market then either, just because it's 4 p.m. Okay. With that, let's go back here. If you have not taken a free trial with us and you want to take a free trial, go to the homepage at CFRN.net. Good. Green buttons all over the place that say free 5-day trial. Just click on those and you'll be brought to this page, EminiTrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. And you can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Now, I said earlier that, last night, or maybe it was early this morning, somebody signed up for the free trial. And they really did put in everything that they got going on, or not going on. All the things that they think they are doing wrong. And so when we do the one-on-one training for him, we have a good starting point. So if you're going to take the free trial, it's important that you give that information to us. Okay. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 1 tick in the euro, 10 ticks in crude, and 16 ticks on the ES. Put us at plus 306.25. Now, today took 19 minutes and 1 trade to get to $100 a contract, and we took a total of 4 trades. Okay. That was our morning session. Okay. If you have any questions, you can call me at 617-943-3298. Again, that's 617-943-3298. Okay. Yeah, and that's it. With that, we can pass it back out. Studio A, fabulous Phoenix, Arizona, overlooking the South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Okay. Yeah, look at this ES. All those wicks right there. It's crazy.
Okay.
Okay.
And
I can see your screen.
there we are. All right, just talked to John. Don't know if he's in yet or not.
Not yet. Not yet.
Okay. All right. Well, let's go back to the charts. Recap of the recap.
Today it took 19 minutes and 1 trade to get to the goal for the day, and at that point we're at $100 per contract.
Good job.
I think John might have just got in. Nope. Different John.
Okay. So, I was mentioning that Head and Shoulders on gold. So let me scroll up. And I made a nice picture, then I deleted the nice picture, but I've got this. Okay. So this was gold yesterday afternoon. We got a shoulder. This is a 30-minute chart. The head, a shoulder, and pretty well-defined neckline. This was when we first triggered that neckline. And just that first trigger took us down about $900 per contract. And then I said, now, because we know important prices, important areas are almost always tested, don't be surprised if in fact this neckline gets tested again. And let's see if I put up a chart of that. I may not have. Oh, here we go. Gold 30-minute neckline triggering for a third time, and this time it's off the BBC. So we had that initial trigger, then we got back above the neckline, down we come again. This time, as we poke back above the neckline, testing the important price, important area, we expect that BBC to be good resistance when we approach it from below. And it was. And so now we're going to have to go back to the actual chart, which, sorry that got messed up. Do I have it somewhere else hidden? No, I guess I don't. So this needs to be straightened out. A little more like that. So this is where we came off of the BBC the first time, and then we hit blue and climbing, sends us back up. So we have 1, 2, 3, 4, actually had 5, you could argue even 6 triggers of that neckline, still heading down. The measured move from the top of the head to the neckline puts us at roughly 1722, and we have a weekly trading zone this week at 1723 / 24. And that's the technical analysis 101 of how a head and shoulders pattern works. This happens to be on a 30-minute chart, but it applies to any time frame that you look at. But you have your head and your left shoulder and your right shoulder. You have your neckline. And so the neckline gets triggered, and again, and again, and again. Again, and even way over here, one last time. Now we're about to get a bearish cross, so obstacles on the way down to the zone below and the measured move of the head and shoulders break of the neckline, that's going to be right here. And if price can get through that area, and we've still got another 6 points or so to drop before we hit the measured move. Now there's no law that says it has to go to the measured move, and there's no law that says it has to stop there. Could continue, but it is a high probability as long as we stay below the BBC. And even though we poked above it a little bit here, this turned out to just kind of be a head fake. Looked like the market wanted to head higher, but no sooner did we get that bullish cross than we're right back staring at a bearish cross. So if price pops up here, hits red and falling and the BBC, that should begin, or should be the beginning of the next leg to the downside, which takes us back to this area where we found good support earlier. And then this is the full move. So the full move is basically, we'll call it 1754 to 24. It's a 30-point move. 54 to 24, yeah, 30-point move at $100 per point. It's $3,000 per contract traded. Head and shoulders. Now, we're not really pattern recognition people. That's not part of our training or our mentoring. But when something like this sets up that's so obvious, it's kind of hard not to at least point it out. Now, as far as the alerts go from last night, let's take a look at the Concierge Trade Alerts. If you want to grab a screenshot, you can do that. Got them out at 6:45 p.m. Eastern. Try to get the Concierge out as soon as I can after the Globex Open. The Logic 247 alerts, those flow around the clock. So, on gold, the number was to consider being short at 1745. That's going to be right about there. So we triggered it. We came down to this support area. Caught a bounce, got back above the trigger. Again, the alert was to sell. $17.45. So from 17.45 we traded down to 17. Oh, we'll call it 35. So that's a 10-point move at $100 per point. It's $1,000 per contract traded. And then we get back above the BBC, back above the trigger. Down we come again. The dynamic this time is different than this time because as we're dropping here, we're supported by red and falling. But as we come down through the trigger, we run right smack into blue and climbing, which we know can act as good support. So this is not an entry on the alert that I would be nearly as interested in as I would be this one and then this one. Because with this one, we've gotten back below the BBC, and when we're below the BBC, we anticipate lower prices. When we're above it, we anticipate higher prices. Someone posted a comment in the discussion group today that they first encountered us a couple years ago, and the reason they didn't catch on a couple years ago and these are their words, not mine, was because our methodology was just too simple. Because they've been to all these other places, bought all these other things, attempted to learn all these other methods, which, as you've heard me say, can be very complicated and convoluted and expensive. Now, now let me say this. Ours isn't complicated or convoluted or any such thing. No, no, no. Ours is pretty simple, color-coded for your convenience. So what are we looking for here? Potentially price is going to come back, tag the trigger, tag the BBC, and then continue its way back down, another leg to the downside to support. And then if we can break through this support, which held here and here, if we break through it here, then the final trade to target would be that weekly trading zone below at 23/24. Now, as I go over these various alerts, if you have any questions, well, why did you do this, or why did you say that, just type your question into the chat box. We're more than happy to give you an answer. Okay, so let's take a peek at the ES. On the ES, last night's alert said to consider being short 28.10. And that's right here. Now the trade to target for any alert. On the Logic 247, sometimes you'll have an initial target, sometimes a second target, sometimes even a third target. But the final trade to target on a short trade will always be the weekly trading zone below. So from 28.10 to 27.26. That's over a $5,000 per contract move. We don't expect it to go there in a straight line. As you see, we came down, we triggered, had a little bit of a retracement, but the momentum was very bearish, so bearish that we couldn't pull all the way back to the BBC. So we continued down, and we run into this area of support right here. That support is sending us back up to what we expect to be good resistance. If it is, then that will create our next leg to the downside. And just like with gold, we have to overcome this area of good support in order for it to make the journey all the way down to the weekly trading zone. Okay? So we'll keep an eye on this throughout the show. So far, we've gone from 28.10 down to, we'll call it 27.60. That's a 50-point move at $50 a point. So this move is worth $2,500 per contract traded. Getting out at a swing high or swing low, that's difficult to do, because honestly, you don't know it's a swing high or swing low until after the fact. We did get an exit signal here, and an exit signal is when, on a short trade, the step line crosses over red and falling, and then we're looking on a short trade for the first green candle that closes above the step line. So if you were waiting for the exit signal on this, the exit signal price is $27.98.5. So that's about a 12-point move at $50 a point, $600 per contract traded. Now those that have been around a while know that once you get an exit signal, if in fact the market continues lower, once you get back on the left side of this red and falling, and there's an entry right there, as we take out these lows down to the next area that we expect to be good support. So that's the S&P. Let's look at the Dow. Last night's alert for the Dow was to consider being short 23665. Okay, sell 23665. Now the initial trade to target, or the trade to target, would be this weekly zone here at 23,525. So that would be 75, that's about 130 Dow points at $5 per point. When price approaches a weekly trading zone, we expect it to be good support till it isn't. And it hung on for quite a few hours. And then this morning, 8 a.m. Eastern, price started to drop, and it took us to the next weekly trading zone below, which again we expect to be good support till it isn't. And when price finds support that it can't get through, it will rally up until it finds resistance that it can't get through. And that area we expect to be right about there. And that could send us back down to test these lows. Remember, on the daily chart, we are looking for a pullback to the BBC. That doesn't mean the recovery's over or the rally's over. It's just how markets work. A leg and a retracement, a leg and a retracement, and price always reverts to the mean. Whether we're looking at a daily chart or a 30-minute chart, price will always pull back to the BBC. Price reverts to the mean, and with us the mean is the green line. So could we continue to sell off here? We're at 27.62, and the BBC is down here at, we'll call it 26.72. It's about 100 points. It would be very tough on the markets to see an additional 100-point drop in the S&P on top of what we're already down today. So perhaps this gets spread out over a couple of sessions. Okay.
I was going to say John just talked to him.
Okay. Well, let's go ahead and open up his mic, and
okay,
we'll pick up right where we left off, guys.
His mic is
Hey, John.
Hey,
Welcome
John.
to the show.
Thanks. You know, it's kind of interesting. Somebody that made so much money, I can't even mention it, out of this TVIX trade we recommended a while back, $39, $40. Got out pretty close to 1,000, and has basically been long the market right up until yesterday afternoon. He calls me like 4 o'clock, just before 4 o'clock, and says, what do we do? What do we do, John? And I said, I think I'll sell. I think you should sell. And it went slightly higher. It just spiked a little bit higher, and then it started turning down. And I did tell him to be ready to cover if cover, you know, could buy went short. But I sold and went short. But I think, you know, if we can't get up above the recent high of the last hour or so, the Nasdaq's acting a bit stronger than the, you know, we were down about 150, and I told him you could probably start to cover a bit, but be ready to re-short if it breaks down. And, but there are some bright spots today. The airlines, you know, they did this deal yesterday, a pretty big deal, and they are actually acting stronger than the rest of the market today. United it opened higher, they sold it off, and it's kind of rallying right now. Spirit Airlines, SAVE, some whatever similar kind of a thing. You know, but
What's the
personally,
symbol?
I'm really not interested in buying these dogs because you know these people sort of been really all over me trying to get me to say when to buy, and we talked about that. We did get a few rallies, but they're not going anywhere. You know, that's the thing. And you know, why you got to be buying? I mean, you know, you don't hear me say this very often, but you know, Tesla was like a better, like a, you know, Tesla's been a stunning performer. We talked about it when it was a 600. Next thing you know, it's like over 700. It's well over 700, and you got to be in the stocks. And look at Amazon. I mean, it opened lower this morning and went straight to a new high. It's just incredible performance. So that's really where the action is. And the you know the golds have pulled back a bit today. You know, the Royal Gold and that. So this is you know, when these things get over 100, I mean, I'm as far as I'm concerned, the more it pulls back, the better, because I'd like to get another run. You know, one of these days, the golds are going to go and they won't stop. I think they just keep going. And the you know, the JNUG and the Nugget, which act pretty well this week so far. There's no walk in the park. There's no assurances, because even though the gold's fundamentals are very, very bullish, you know, we are down. You know, we kind of got the high yesterday and we corrected, and you know, we're pulling back. But this is great for people who trade gold, because there's a lot of the gold actually has been incredible to trade recently. There's been, you know, if you can catch the swings, there's some really, really good trades. I mean, $2,000, $3,000, $4,000 trades almost every day, up and down. You know, it's really tremendous. I've never seen anything like it in the gold market, really. The other thing is we sort of had a zigzag correction here off the lows this morning, that if it rolls over, you know, if we do go lower, it actually could really, you know, take this market down maybe a lot more. So remember, you know, it was almost like it was too good to be true yesterday. That's actually why I told this guy to sell at 4 o'clock, because it just seemed to me to be just like a little bit over the top. And because we really had an incredible rally in the last couple of days. And but remember, this market does have a capacity to come back from the brink, and we are potentially set up. You know, I'm sort of getting a developing buy signal here, that unless we go down, you know, unless we roll over, probably, you know, may see the market continue back up towards the highs by the end of the week. So and even, you know, look, a bit of bad news, I think, of the retail sales and some of the bank issues, you know, mortgages and things like that. You know, there's really, the market sort of has got almost a titanium shield around it at the moment in terms of, you know, really bad news. I mean, we've had so much bad news already, and the market's going up. It's sort of like just shrugging off. I think the market's looking ahead, and you know, obviously with the possibility of normalizing over the next few weeks, you know, that's very, very bullish for the market when it happens. As is, you know, look, these guys, people getting their checks, so the unemployment, you know, even though it sounds terrible, you got 70 million people file for unemployment claims. They got money, you know, they're almost getting as much as they were when they were working, maybe more in some cases. So, and if they, by the grace of God, the sooner they get back to work, if we start going down by millions of claims, you know, maybe back under 10 million, I mean, the market's probably going to react pretty favorably to that. So I think you just have to do what we always do, which is take it day by day, you know.
Yeah, no, exactly. Well, I think we have a retracement underway. I was just talking about that when you came on the S&P on the daily chart. We're looking for a pullback here. to the BBC, which we expect to be good support. And but that still means price dropping almost another 100 points on the S&P before we find that good support. And that's when we believe this next leg to the upside will kick in, take us up at least to this 62% fib, or the 62% reverse fib, where we may run into some resistance, and then this number up here, 3272, we look for that to potentially be good resistance. So I think we're going higher, but I think we got to drop before it kicks in.
Well, I agree with what you're saying there. Look, it's a little bit tricky, because if right now that actually looks like a three-way rally off the lows, and that's as soon as we start, if we do break above 2,900 and sort of head for 3,000, it changes the whole equation, because there's a gap up there as well at about 29.5, 29.50 that it probably shooting for to test. Now, if it can get over that gap, that could be bad. But look, if in the worst case scenario is if we do drop down from here, it actually could turn bad. It could turn real bad, and you have to be, you have to keep that in the back of your mind. But as the other thing is, if we go green today, then that's it. Or we may go down and test that previous high, the 2670 area. Obviously, that would be a great re-entry point for the long side if it looks like it's gonna go up, because we might actually have an acceleration to the upside from that point.
There was some stock you mentioned earlier, Spirit, I think it was.
SAVE.
SAVE. SAVE. There we go. Okay.
Yeah, I mean, it does look like it's got that kind of doji today, where it could suddenly be maybe have a shot of going up to 20. The other one is UAL. They're all pretty much the same.
Boy,
but
they look very, very similar, yeah.
Yeah, I mean, on the other hand, like I say, if we break down, all these stocks are going to go to new lows. So it's by no means, I mean, I personally don't like these things, and I'd stay away from them for a while. It's just kind of like, if they get it, the only rally they're going to get really is either artificially in an artificial rally from some sort of an injection of capital, or I guess if they get back up and running, they presumably back in business, they obviously should go a lot higher. So but I think you've just got to play it by ear, and if I mean, obviously, I think if they are acting a little bit on the bullish side today. They're acting stronger than the market, so that should be kept in mind. And if they rally a little bit higher into the end of the week, there's probably a chance that the worst may be over on these things. They're being hit pretty hard.
You need to get that?
Yeah, listen, I better, thanks for the invite.
You betcha, John.
I'll call it a day till tomorrow. Thanks.
All right. Bye-bye. All right. So we covered the ES. Covered the Dow. Let's look at the Russell. Okay. Last night on the Russell. If you didn't grab a screenshot earlier, here's another shot. So we're looking to be short 12.31 on the Russell. That's right about here. $12.31. Okay. So from 12.31, the trade to target is the weekly trading zone below 1222. We got a weekly trading zone at 1222. So that's about a 9-point move. And then when price traded through that weekly zone, made it down to the next zone at 1191. We did get an exit signal right here. So from the entry to the exit signal that printed on the chart, the closing price there was 1206. So that's a 25-point move at $50 per point. It's a little over $1,000 per contract traded. On the NQ, last night's alert, consider being short 85.43. $85.43, and we dropped down to 84.86. So 85.43. Down to 84.86. About 60 points, $20 a point. It's $1,200 per contract traded. So we triggered once, and then we got back above and triggered again. Now if we come down here on this trigger, you got to be real careful on this one, because just like with this one, we ran into red and falling, but on this candle that switched it to blue and climbing. So if we come back down through that trigger again, you got to be patient and see if price can get below blue and climbing before you get short, because this you got to consider good support. So we covered the S&P, the Dow, the Russell, the NQ. Here's crude. And crude has been, fairly quiet to the downside. Last night's short for crude was at 1985. And from 1985, we dropped down to 1920. So that's a 60-cent move at $10 a tick at $600 per contract traded. We triggered, back above the trigger, triggered again. And this time, as we triggered, we run right into blue and climbing, but we still managed to get below it, but we weren't able to take out these swing lows. And now we're back north of the BBC, so we're looking for a climb. If we can take out this obstacle overhead right there, if we can get above that, then there's pretty clear sailing up to that weekly zone at 2170/75. Now the zone, the reason the market kind of ground to a halt here, we've got a weekly trading zone at 1940/45. 1940/45. So price went from the zone down to the zone, found good support, support, support. Now it's headed back up to potential resistance. If it can get through that area, then we look forward to make a run at the zone overhead. That's how price works. It goes from zone to zone to zone. And we've already covered gold, big head and shoulders pattern. If this pattern completes, it will take us down to 1723/24. For that to happen, we've got to get below this area of resistance, which held here, and we've got the bearish cross. So price may or may not pull back up to the BBC, but the stage is set for it to go down and test the support area. And if it can get through it, then there's still a nice little drop from 17. There's still about a $600-700 drop before we get to the weekly trading zone and the low of the measured move. So those were the Concierge Trade Alerts. That's the static report that comes out every evening shortly after the Globex Open, just like this. As a member, you have access to the private Telegram channel. The Logic 247 alerts, those are based on current price action. Those are distributed in a private Telegram channel as well. But as opposed to being a static report that comes out once per session, the Concierge Trade Alerts, they come out around the clock. Could be 2 a.m., could be 2 p.m. So far this week, week 89, 28 total alerts issued, 1 never triggered, 6 waiting, 21 actionable alerts, 3 got stopped out. So far 14% of the logic alerts have been stopped out so far this week. And here's what they look like. Again, we're in week 89. Last week, week 88, we had a total of 50 alerts. 11 never triggered, 39 actionable, 6 were stopped out. So that's 15%. We average 20% being stopped out each week. So here we go, week 89. This started this past Sunday night, 6 p.m. Eastern. That's when the Globex session opens for the week. And we keep the pedal to the metal all the way up until Friday afternoon at 5 p.m. Eastern. Thumbs up means price found its target. A red X means it got stopped out. And when you see the little Z's, that means it never triggered. So we started out with the S&P, the Dow, Crude, Gold, NQ, another NQ, another NQ, S&P, Russell, Crude, Copper. It's been a while since I put out an alert on copper. There's a Dow that got stopped out, an NQ that got stopped out, S&P, Dow. It's an S&P that got stopped out. It's Crude, Gold, and there's a Dow, and these others are ones that we're just still waiting on. If you're on the trial, make sure you get into the discussion group, the alert trial discussion group. You'll not only be able to ask me questions, but you'll run into our other traders who share their charts, their thoughts, their ideas, all based upon everything that Michael teaches in the live training room in the morning and everything that I teach in regards to the alerts and the bigger time picture trades, bigger time frame trades. So as part of your trial, you have access not only to the alert channel, you have access to the discussion group. This is an opportunity to talk with other traders, to see their thoughts, their ideas, and not have to put up with any of that negativity that is so often a very much a part of these internet stock message boards, where there's always a lot of hatred and vitriol and sometimes even ugly language. We got a real nice place, and you'll meet some very nice people there, and you'll learn some very important things about trading. let us go to our good word for the day. Now, here's a question. Do you have a plan for your life? We know we should have a plan for our trading. We've all heard plan the trade, trade the plan. What about life? Proverbs 21:5 says, good planning and hard work lead to prosperity. Proverbs 21:5. Without a plan for your life, life just happens to you. Some of us plan our lives one day at a time. We wake up, make our to-do list, and dive into action. Some of us even plan our lives 1 week at a time. We review the calendar for the week, check our appointments, review our goals, and then we get to work. Leadership expert John Maxwell writes, at the beginning of every month, I spend a half day working on my calendar for the next 40 days. He says that 40 days works for me rather than just 30. That way I get a jump on the next month and don't get surprised. I began by reviewing my travel schedule and planning activities with my family. Then I review what projects, lessons, and other objectives I want to accomplish during those 5 to 6 weeks. Then I start blocking out days and times for thinking, writing, working, meeting with people. I set times to do fun things such as seeing a show, watching a ball game, or playing golf. I also set aside small blocks of time to compensate for the unexpected. By the time I'm done, I can tell you nearly everything I'll be doing, almost hour by hour during the coming weeks. This is one of the reasons I've been able to accomplish so much. Now, that was leadership expert John Maxwell writing. But the thought of planning 40 days at a time might overwhelm you. So start by just planning your day. Then aim for a week, then a month, then a year. And if you consult God, according to Proverbs 3:6, He will show you which path to take. In Proverbs 21:5, good planning and hard work lead to prosperity. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.